So, a strong start to the week for the local share market. Earlier I spoke to Marcus Padley from Patersons Securities. Marcus Padley, thanks very much for joining us.
My pleasure, Phil.
Not much of a lead from Wall Street, but Chinese manufacturing data appears to have inspired the market. Is that your assessment?
Yeah, we were doing absolutely nothing today until midday when Chinese Purchasing Managers Index PMI number came out, which sort of shows you the strength of their manufacturing sector. It was higher than expected. The Aussie dollar jumped 0.5 cent. The market started going up, led by resources. Resources are now up 14% since the beginning of the financial year. That's double the performance of industrials and banks. And so that whole theme, resources leading, has carried through today.
And, well, a big day for the Reserve Bank, a big day for all of us tomorrow, not just the horse race, but also the Reserve Bank board meeting on interest rates. Can you give us some idea of how you think the decision might affect the market if rates are on hold or if they end up hiking rates, which I guess would be more of a surprise?
Yeah, the odds are at the moment, the economists are split 50-50 on whether we get a rate rise. Futures markets factoring in about a 25% chance of a rate rise. And whether we do get one or not, I really can't see that it's going to drive the market much. Interest rates here aren't the biggest driver in the market. The US dollar is, and in particular what commodities prices do when the US dollar falls. It's not really an Aussie dollar thing at the moment or an Australian economic thing at the moment. It's all coming from the States, and we'll find out more about that after the FOMC meeting, which we hear about Thursday morning.
So what are you expecting for the market, both locally and internationally, as the week unfolds?
Well, the FOMC meeting could be an inflection point in the US dollar, thinking about where the US economy is going, how much money they're going to print to keep it afloat, and that really could change things around. If they have a big package, then things will continue as they are. The US dollar will go down, commodities keep going up, and the equities will keep going up. If they if they sort of back off a little bit on quantitative easing, then there's a chance the US